In this video, learn how a developing trader performed a backtest for a triple earnings beat gap up to make his most profitable trade ever. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, watch a developing trader share why and how he sized up in an A-plus trade, backtested for his best trade ever. Let's get to work on sharing these game-changing trading lessons so you can grow your trading account.
I'm Brandon, and this is the triple earnings beat pre-market gap up backtest playbook trade I took on Snap. So trade strategy, triple earnings beat, pre-market gap up. So for the criteria, I'm finding a stock that is showing abnormal price action. I'm backtesting the data to see if there's any statistical edge to trade intraday. Look for a technical setup within my playbook that I trade well. And this price action can be large pre-market gaps, abnormal price action the previous day, or abnormal performance over the past few days to few weeks. So for this trade in particular, the variables for the trade are Snap has to open the day 10% or higher from its previous day's close. Snap opens within the top 50% of its pre-market range. Snap has clear pre-market levels to risk off, and once Snap clearly gets above VWAP, I want to see it hold above. And these are all patterns of previous examples when Snapchat gapped up 10% or more over the past 2 years.
So Brandon, what's your background where you're using backtesting to help you with this trade?
Yeah, so I've been backtesting individual setups. I've been backtesting probably for the past 6 months or so, on and off, but I've really been getting into it over the past month or two since starting the internship with SMB. And I found that backtesting particular stocks, it's actually something that I've learned from Dr. S. And it can give you a great edge either intraday or over a multi-day time frame.
And what did you use to backtest this particular backtest?
So for this one, I pulled data off of Yahoo Finance and manipulated it in Excel.
Okay, great.
Thank you. So for positioning, entry positioning, I break down how I enter and exit into trades in a few different ways. This is something that I went over with my mentor, my senior intern, Joe. But I try getting on a feeler size. So this is the first entry. If stock fits criteria and is trading as expected off the open, I would put on about 20 to 25% size before confirmation. Interest, second entry, trade is developing, good prices offered by pullback, starting to see checks in my favor. And then the majority of my position, which is the most important entry, point of confirmation, playbook technical setup presents itself, in this case, breakout of pre-market highs. So for sales, first sale is driver's seat, risk off, want to take off size, psychologically easier for me to take off size early on. So I can do this by putting on bigger size with tighter risk to begin with. So my senior intern and I, we talk about a risk to tilt a lot and the ways we trade psychologically. And it's just a lot easier for me putting on bigger size off the open so I have enough to scale out and cover risk. And even if that means having a bit tighter risk, that's what that works well for me. So second is pay myself. If stock is acting weird or market is acting weird, tape showing weakness, breaking below moving averages, any other pay myself reasons to sell were hit. Third is majority, which is price targets were hit, have them set before entering each trade. And then extra, which is overshooting sales, extra runnings if the trade presents that opportunity.
Did you know Joe before you started here?
I did not, no.
So you were just assigned to him randomly, or did you ask for him?
I was assigned to him randomly. I'm told that we have a lot in common.
All right, great. So what's the daily communication that you're partaking in with your senior trader?
We meet at least once a week, and I present the playbook trade to him, and he talks about progress. He gives his opinions on them. He shares his past playbook trades with me, and almost daily we bounce trading ideas off of each other. For example, I shared this trading idea with him on Snap before the market opened, and we were talking about it. He gave me his advice on it. And it was a great experience because he had a different opinion on it, and both of our opinions sort of ended up playing out, and it worked out really well.
Yeah, and this is one of the things we try and do here, which is we want the junior interns to feel comfortable We want them to be learning from different people. By the time people are senior interns here, they're pretty knowledgeable about trading. They're pretty advanced, and they offer some really terrific feedback. But mostly, we just want you guys to feel comfortable. We want you to have somebody to talk to, use a sounding board, share some ideas with, get some feedback on some ideas with, as well as other people at the desk. So, and not every junior intern takes advantage of that. So you are to be commended for taking advantage of that resource during your internship right now.
Yeah, exactly. Joe's been great. His process and approach is very similar to mine, so we work great together.
Yeah, and we're just seeing the people that are doing the best at the firm are the people that are working together. Save maybe a couple of guys. I mean, the younger guys who are coming up the curve fastest are also the guys who are really reaching out to other people, older and younger and same age as them. Really encourage you to continue doing that. We're all just trying to figure some stuff out. We're all learning, and the more smart people that we're tapping into, the better.
Yeah, that's great.
Huge advantage being at a prop firm to be able to tap into talent like that. Huge advantage.
Yeah, exactly. I'm very thankful for that. So for reasons to sell, I have two different reasons to sell. Pay myself reasons to sell, which are basically, so pay myself reasons to sell are going to be when I sell smaller size of my positions, and it's a lot smaller than the majority, but I have one standard deviation above VWAP, one ATR done on the day, and weakness coming in on the tape. So one standard deviation above VWAP, this is something Jeff Howard and I have been working a lot on. He loves trading around VWAP, and he introduced me to the standard deviation band, and I really enjoy trading around it and using it as an area to take some profits at. So for majority reasons to sell, 3.25 to 4.4 upside ATR relative to opening price. Offers drop 74, which is where I would stop out, and price fails to hold key levels under 3.25 to 4.4 upside ATR. And how I got this upside ATR was by taking the instance I'm going to show in a few next slides of the back testing and finding the average upside ATR of the instances and using that as a price target.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this was the back test I ran. I actually ran 2 different back tests before market opened. The first one being instances over the past 2 years where Snap gapped up 5% or more, and the second being where Snap gapped up 10% or more. So some context right here. Snap reported better than expected earnings Thursday after hours, in which it gapped up about 16%. I ran 2 back tests, both showing every day over the past 2 years. The first one was instances Snap opened the day up 5% or more, and the second being instances Snap opened the day 10% or more. While the first back test gave more results, the second one was more specific with much better returns.
How'd you choose the last 2 years?
I was looking back at data, and I sort of found a balance over doing this over the past month, where I would do 1 year and 5 years, and I found a good balance of 2 years where it's enough instances and we're still in like a very similar market cycle, if that makes sense.
We're in a similar market cycle now than the last 2 years.
Yeah, and when I was back testing 5 years ago on some stocks, they would have very, very different returns, and they were acting a lot differently, especially when I was looking back at the charts.
You were trying to match the most latest regime.
Exactly. I wanted to find something. I wanted to get a balance of enough instances and accurate results on how the stock may act similarly.
Okay.
So statistics on these back tests. So some results that I got. So each back test gave positive results, and each back test gave more than one upside ATR on the day of the gap up. And something very interesting I found was each instance had the best returns relative to time and trade after a 5-day period. So this is the intraday change from open to close after the gap up. So 2.39% on the 5% or more gap ups and 5.4% on the 10% or more. Upside ATR right here. On the 5% or more, it's 1.43 average upside ATR, and on the 10%, it's a 3.84 average upside ATR. And then this is the 5-day change, which time relative in the trade was the most significant, was a return of 15.12% after 5 days after the gap up.
Yeah, just one thing to be thinking about, I think it's great that you're scraping the data from a third party.
Mm-hmm.
You don't know if that data is accurate. So as you get a little bit more experience, you're gonna have to make sure that the data that you actually are scraping or using or inputting actually is accurate.
Okay, yeah, that makes a lot of sense. And we do have access to other places, Cloud Quant and then market charts as well. I'm getting a subscription to, and we definitely have a lot of resources, so that's a great point. So pre-market notes and game plan, this was my my notes going into the day. So Snap earnings beat breakout to all-time highs. Some fundamentals, so BEPS, revenue, daily active users increased by 23% year over year. They issued Q3 sales guidance above estimates, multiple price target upgrades. Gapping up about 16% above all-time highs, 4.05% short float, clear pre-market range, and pre-market ATR was 51% of its average daily ATR. 3 instances in the past 2 years of Snap opening the day up 10% or more. Covered in the past backtest or in the past slide where average close was 5.4%, average 5-day change is 15.12%, average upside ATR is 3.84. So not only is there a significant upside edge intraday, but the best returns came after a 5-day period. I plan on approaching this trade as a multi-day trade or multi-day day trading equity intraday, and using call options to express my multi-day trade thesis. And that's something I'll talk about in the PowerPoint further down.
I really love what you're doing here. There are 2 different trades, right? There's an intraday trade, and then there's a longer term trade. And not only are you seeing the distinction between an intraday trade and that there's actually more edge, which you can back up statistically with a 5-day trade, but then you're actually expressing it with another product, with options. And so if you sit on our desk at some point, you'll have an intraday account, and you'll have a long-term account, and you'll have an options account. And so you very well could be intraday trading this based on your back testing and your skills with stock. You could be swinging this with your back testing and your swing trading skills with stock, and you could also be supplementing or even driving the 5-day idea more with options. And you literally, and there are guys on the desk who do this, they're just completely separate. They could be 3 different trades actually there. You could have an intraday trading strategy, you could have a 5-day stock trading strategy, and you could have a 5-day options trading strategy, which could all be different.
Yeah, that's a great point. And that was my thought process and mindset going into the day.
And what's really helpful about that is that as you get better, as your skills develop, you really will have this trade in your long-term account, and you'll just set it and forget it. You'll have a target, you won't do anything until it hits the target, you won't get out unless it really gets below a certain level. It's just set it and forget it. And then with your intraday skills, you might be long, you might be short, you might be long in your longer term account and find opportunities where it's really a short now, intraday, and you really want to take advantage of that. For instance, for those of us who've been trading AMC recently, we can be leaning our longer term counts from 55 short, but see lots of really good opportunities to get long intraday and day trade that while letting our longer term account just do its thing.
Yeah, that's a great point. So not only does it allow you to have exposure to a bigger term move, but you have the flexibility to play both sides.
Yeah, I mean, like for instance, in this stock, I think you're going to show us this, but probably the best trade was the opening. The best trade is what we call the opening drive for an intraday trade. That was probably the best trade. So you could have an opening drive trade long in your intraday account. And then you could have in your longer term equities account a long from the open. And then with your options account, you could be buying the 80 calls and working that throughout the day. And really profit with the opening drive. And then we'll see what happens with the 5-day play. We're not there yet on 5 days. We'll see what happens with the 5-day or longer stock and options trade. Anyway, think about that.
Exactly. Yeah, and that's exactly the type of trader I want to be, where I can execute.
No, but I think too many times people think, well, I'm long in my longer term account. I'm long in my swing trading account. The only thing I can do in my intraday account is trade it on the long side. You don't have to do that. You could be doing a lot of different things.
Yeah, thank you for that. So for execution, I either wanted to see a flush to 72.95 with buyers stepping in and stalling out on volume, or I wanted to see a breakout of 74.40 pre-market highs. And what I don't want to see is a break below 71.70, which I believe is pre-market support. After breakout of pre-market highs, don't drop below 72.95 and then hold VWAP after breakout. Again, these were all patterns over the past 2 years after looking at the intraday chart of what I noticed how the most successful setups played out and what they didn't show. So price targets 82.48 to 85.64, and these were the 85 percentile to 115% percentile of the average upside ATR. And I also wanted to note that 12.05 seemed to be a near-term high put in on the past instances. Just something I wanted to point out as well. So bigger picture, SPY right here, it was consolidating at near all-time highs, and then we had that sell-off, Delta variant concerns, and then we really just rallied hard and then created new all-time highs. This was about, I think, a 4.5% move in 5 days after the low. So this is the daily chart on Snap. You can see it was really forming this larger range over the past year, gapping up above after reporting earnings right here. So 30-minute technicals showing the same thing. After hours on Thursday, it gapped up. This was about a 10 to 12% move, continued higher, held the gap in the morning, which was very important, formed a nice range, and broke out of that and had a really strong opening drive in the morning. And here's the intraday chart on the 1 minute. And again, you can really see that very strong opening drive it had. Pulled back to VWAP, consolidated, chopped around a bit, tried making a second leg higher, created a higher low, or a lower high, sorry, and then came back down to about 75, where I put in a short-term bottom. So intraday fundamentals, Snap reported better than expected earnings Friday after hours. Snap announced they beat EPS. Revenue and daily active users increased 23% year over year. Snap also issued Q3 sales guidance above estimates. Snap received multiple price target increases going into the day from tier 1 banks such as Morgan Stanley and Credit Suisse. Snap had a historical upside edge going to the day due to its greater than 10% gap up. So ATR on the day was 1.7, short float is 4%, average volume is 15.45 million, institutional ownership is 18.2%, insider ownership is 1.8%. So something about the institutional ownership, 18.2% isn't significant, so it has you thinking after this gap up, after really good earnings, if you're going to see institutional buying coming in off the open.
Yeah, I'm surprised it's so low.
Yeah, I was surprised too. When I looked at that in the pre-market, and that's something that I definitely kept in mind going into the open, that we may see buying, especially gapping above all-time highs.
I think that's an interesting thought, which is there needs to be more exposure from some of the institutions for this stock after that earnings.
Yeah, exactly. Especially after being so strong over the past year. So these are the intraday charts of the previous examples over the past 2 years where Snap gapped up 10% or more. And these two are very common. So there were a clear pre-market range. It was opening up at its upper end of its pre-market range. It made a strong move. And then once it got above VWAP, it really held above until it put in the backside move, and then it dropped below. But if it held, it really trended throughout the day. And then over here, a bit different. It was a bit more choppy. But it did open up at the top 50 percentile of its pre-market range, and then it did make a strong move and put in a high around 12.05. Same with this chart. And this one around 12.05, it put in a short-term high over here.
Yeah, the one difference between those last three instances that it gapped up 10% and recently is that it was so steep right on the open. So, you're right to point out, hey, when it really held VWAP, it trended into the close.
Yeah.
You want to take a step back and say, but the opening drive wasn't really that significant. The opening drive isn't comparable to what the opening drive was for us the other day in Snap. And so that may bring in some different patterns as to how it's going to trade over the next 5 days, because the opening drive was just so steep.
Yeah, that's a great point.
Your last chart is just very systematic buying without a super aggressive push to the upside.
Yeah, that's a great point. So here it took a lot longer to make maybe a 1 to 2 ATR move, or in the previous slide it made a 1 ATR move within a minute or two. So trade management. So right here, reiterating how I entered and exited. So feeler size held 74 off the open. I added size there. Once we immediately broke above pre-market highs, I added the majority of my position. Driver seat, so again, wanted to cover risk. I sold into 76, 76.5, and 77 to cover risk. Pay myself, seller started to step in above 77.50 on the tape. Volume started to decrease a bit. We had this wick down to 77.20, which was a local inflection point that you'll see on the tape. But local support with buyers stepping in on the tape, and I added size there. Pay myself, sold more up into a little bit above 78, came down. And then on this hold and a bit of like chop around VWAP, I tried adding more size, and then I ended up getting flat once we offers dropped VWAP. And my sizing, so I added 9% off the open, 39% on this dip, and over here, and then the majority of my size on the break of pre-market highs, I added about 52%. And then for my sales, scaling out to cover risk, I sold 30%. On this move over here where sellers were present, I sold 43%, and then I cut 27%, the remaining 27% on the break below VWAP. And on this trade, my risk was offers dropping 74, which was low of day. And on this ad at 77.20, my risk was offers dropping 77.20.
Yeah, I like how you take profits into the up move.
Thank you. Yeah, again, that's something that it's just psychologically the way I trade. I'm the trader where if a stock is making a 1 ATR move and I'm not taking profit and it goes against me, my risk to tilt would be pretty high on that. So taking profits on the way up is something that I found works best for me. So trade review. So A plus execution. The most important aspect in this trade was my sizing. This is the first A++ trade I've taken, or the first trade I have risked more than 30% of my daily stop on. I risked about 60% of my stop on this trade. For context, this trade did not hit my price target. It moved about 50% of the move I was looking for.
So walk me through how you decided to give it 60% of your stop for this particular opportunity.
Yeah, so a few things. One, gap ups above all-time highs. Statistically from TraderView, those are the setups that I not only have the most experience trading, but I trade the best. So gapping up above all-time highs was already a check in my favor. The fundamentals of Snapchat itself, the price of it, the market cap, the average volume done on the day are all statistically, again, checks in my favor. I trade those the best. So mid cap to large cap stocks, the price of it between like $20 to $100, I trade those stocks the best, and the average volume over 25 million, all checks in my favor, and I trade those the best. And then the significant statistical edge coming into the day, that was the third check in my favor. And all three of those combined, I made the decision that this was going to be an opportunity, especially with the good earnings that were reported, that I can really size up on.
Did you do that before the open?
Yes. Yeah, I did. This was something that I determined actually the night before, because they reported earnings Thursday night, or Thursday after hours, and looking at the fundamentals of Snapchat and how much it was gapping up, and after doing the back test.
Yeah, and we kind of glossed over that, but the fundamentals were super strong and different and more positive than expected, which we were talking about this. I don't know if you were listening to the AM meeting that we had on that day.
I was.
Brian, you were awesome. Brian laid out a bullish case for it in our AM meeting before this open. And we talked about how good of an opportunity this could be to the upside. Not that we weren't open-minded, we were, and why. But the news was super positive, and you're not going to see such great, unexpected, unusual to the upside news from a company like we did with Snap. And because of that, and with your backtest, you can decide this is a much better opportunity than lots of others, and because of that, it warrants more risk. In fact, it demands more risk.
Mm-hmm. Yeah, no, that's a great point. And sizing up is also something that I noted in my monthly review from past month. It's something that I've really been trying to work on and get consistent at, taking advantage of the bigger opportunities. So yeah, this trade moved about 50% of the move I was looking for. Yet this was my biggest trade of my career. It did not have a crazy R, about 3.00, but because of my sizing, it was my biggest trade. I'm happy with my entries, especially the feeler size I put on off the open. I'm pleased with my ability to quickly add size on the lower wick down to 77.20, as that was about a 5-second opportunity. And I'm pleased with my sales. I need to keep in mind that this trade only made 50% of its average move, so I'm okay with how I added size around VWAP, especially with buyers starting to step in. And yeah, this is something I want to point out. When I was originally first going back and reviewing this trade, I was a bit maybe disappointed on the amount of size I tried adding at VWAP and how I tried adding it there. But then I reminded myself in the bigger picture that this made 40 to 50% of the move I was looking for. So I think that add was justifiable or reasonable. So and over here, using options to express a bigger picture thesis. So going into this trade, I knew I wanted to make an intraday trade with equity, but because of the statistical 5+ day returns, I wanted to get long delta exposure through call options. On the pullback below VWAP, I started scaling into August 20th 80 calls, which I plan to swing over the next week. I'm aiming for a 13.20 to 17.80% move from today's open, which comes in at 84.22 to 87.60. With the price I got filled on these, hitting my price target by expiration would give me about a 50% return on these options. However, I have about 30 days until expiration, and I'm looking for a 5 to 7 day move, which means these options would still have extrinsic value built into them, netting me a higher return.
All right, we'll see by the end of the week.
We'll see by the end of the week.
Well, we're rooting for you. But I like how you structured that trade. I think that makes sense. I think that's a good trade to swing that with calls, whether it works or not. That makes sense to me. There's something here that you did which I really like. Lots of people always ask me about. Super important. Something that can differentiate elite traders from above average traders. And you kind of glossed over it, sort of. What do you think that is?
Was it within the execution?
What else? No, I don't think your execution stands out particularly. I think there's something else that stands out in particular.
Stands out in a good, positive way or a negative way?
Yes, don't be nervous. In a positive way.
Was it the fact that I sized up on a bigger opportunity?
Yes, 100%. 100%. Yeah, I really, if I were doing this PowerPoint, I'd like bold that. I'd make the letters bigger. I'd like put a special color in there. I'd feel super proud about myself for doing that. Elite traders know when they're right, and they press their risk when the opportunity presents itself. We call it pushing the buttons. When we talk about great traders behind closed doors, we talk about their ability to push the buttons with speed, and it's not that they're being irresponsible in any way or that they don't consider risk. It's that they go for it. They go for it when they see it. They go for it when they see their setup. They go for it when an opportunity like this, which is just different. This is just a better opportunity. I mean, we were talking about it in the AM. This was a better opportunity than lots of others. If you sat in this room in the morning and we went through our top 10 AM ideas before each opened, this was just one of the better ideas that we talked about in a while. It stood out. And when that happens, it's good to be able to identify, hey, this is a really good opportunity. It's great to really be able to put the risk on in those opportunities. And for some people, it's mandatory that they're able to do it. And we're all sitting around here for long periods of time. We're expending lots of energy. These are our peak years of talent and ability. And if you're going to see an opportunity, you've got to push the buttons. You've got to put the risk on. You deserve to make a ton in an opportunity that you call an A+ trade and you've done all this work on. You deserve to push the buttons. You deserve the risk. Our firm is going to tell you, by the way, if you don't take the risk, that's what you're going to need to do to get better. Push the buttons. Put on the risk. Go for it. And so you did that. This isn't an example which is common, where guys sit there and be like, I saw an A+ trade, I should have put on more risk. You're not doing that. You did put on the risk. And it doesn't matter what the risk is for you at this time. You put on a large percentage of your risk. And if you keep doing that, if you keep putting yourselves in positions to be in A+ trades, and you keep putting yourself in A+ trades with lots of risk on, the results are going to take care of themselves.
Thank you. Yeah, that makes a lot of sense. After doing self-reflection, I realized that sizing up into my A+ trades was something that was very important, especially to the style of how I trade. Thank you for pointing that out, and I'm glad I executed that way.
You did it. You did it. You did it on this trade. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.